Okay, let's unpack this. It's quite something.
Mm-hmm.
You've got a company, right? Built its name, helping businesses make sense of their data. Sophisticated software.
Yeah, the classic BI profile.
Exactly. But now this same company is making headlines for holding a jaw-dropping amount of Bitcoin.
More than any other public company out there. It's really unprecedented.
We're diving deep into strategy today. That's ticker MSTR, formerly known as MicroStrategy, of course.
And what's truly striking, as you said, is this kind of dual nature.
Totally.
I mean, here's a firm with deep roots in business intelligence, founded way back in 1989.
Michael Saylor and Sanju Bansal, yep, based out in Virginia.
Right, Tyson's Corner. And for decades, they were known for their analytics platforms, mobile stuff, cloud services, the whole package.
They've been a long-standing player, empowering organizations to, really get their information. Their Strategy One platform, for instance, tries to make complex data insights accessible, uses things like hyperintelligence.
Right, like the hover over insights you mentioned. See purchase history instantly.
Yeah, exactly, that kind of context. And they have their enterprise semantic graph. Think of it like a master data catalog.
Making sure everyone's singing from the same hymn sheet, data-wise.
Pretty much. And let's not forget their core stuff, like MicroStrategy analytics and desktop.
The bread and butter tools, yeah.
Mm-hmm.
Reports, dashboards, self-service discovery, web, mobile.
Plus the usual consulting, education, support services you'd expect.
A well-established software portfolio. Solid history there.
Right. But here's where it gets really interesting. Starting in 2020, they made this very deliberate, very public leap. Adopting Bitcoin as their primary treasury reserve asset. They even called themselves the first Bitcoin treasury company.
Which, if you connect that to the bigger picture, it's just, wow, an unprecedented move for a public corporation.
Totally.
As of Q1 2025, they were holding, over 553,000 Bitcoin.
Over 500,000 BTC. That's a colossal sum.
And acquired through all sorts of means, cash reserves, debt, equity offerings. They've really leveraged up to get it.
Their stated reason, a core belief that Bitcoin is just a superior store of value long-term, better than cash.
So for this deep dive, our mission seems pretty clear.
Yeah.
We need to figure out how these two, seemingly separate worlds within strategy, the software business, and this massive Bitcoin bet actually intersect.
Right. We need to look at their recent performance, future plans, pull out the key takeaways for you, the listener.
Because it raises a really fundamental question, doesn't it?
Yeah.
How do you even value a company like this?
With two totally different engines driving it.
Exactly. Their financials are now tied not just to software sales, but also to the notoriously wild swings of Bitcoin.
Okay, well, let's start with the software side then. Their traditional business.
The BI stuff.
Yeah, AI-powered enterprise analytics. We mentioned Strategy One, aiming to democratize data.
Right, for non-technical users.
And MicroStrategy analytics and desktop, the workhorses for visualization, exploration. And MicroStrategy mobile for custom apps on your phone.
But it's crucial to remember this is a really crowded field. Super competitive.
Oh, definitely.
You've got SAP Business Objects, IBM Cognos, Oracle BI, Tableau, Power BI, Quick, Syssense. I mean, the list goes on.
Big players.
And the numbers suggest strategy is facing some headwinds there. Their market share in BI tools is sitting at 3.4% currently.
Which is down slightly.
Yeah, down 0.2% year over year.
Yeah.
And this sort of decade-long revenue decline, it really underscores a key point.
Which is?
Their foundational software business, it's struggling. It's not the main driver of their valuation anymore, not by a long shot.
Okay, so let's pivot. Let's talk about the digital gold in the room.
Literally, the Bitcoin treasury strategy.
Started August 2020, as we said. Holdings now over 500,000 BTC.
Massive. And they've been actively buying more, using various financial maneuvers.
And the stated reason, again, is that direct belief. Bitcoin's a better long-term store of value than fiat.
It was bold. Some might even say radical. It's fundamentally reshaped the company.
But is it stable? I mean, that's the question with Bitcoin as a treasury asset, right? Given the volatility.
That is the question, yeah. Which brings us nicely to their recent performance.
Because this is where you really see that interplay. The 2024-2025 results. They tell a story heavily influenced by both software and Bitcoin. Maybe even more by Bitcoin.
Let's dig into Q1 2025 specifics. Revenue came in at $111.1 million, which is actually down 3.6% year over year. And it missed analyst expectations.
Why the dip?
Well, it seems a decrease in product support and services revenue kind of offset the growth they saw in licenses and subscriptions.
Gotcha. But that wasn't the big headline from Q1, was it?
Oh, no, not at all. The headline was the net loss, a staggering $4.22 billion.
Oh, wow. 16.49 cents per share loss.
And a huge loss was mainly driven by a $5.91 billion write-down on their Bitcoin holdings.
Ah, okay, so because Bitcoin's price dropped 25% in Q1?
Exactly. Accounting rules meant they had to mark down the value on their books. Boom. Multi-billion-dollar paper loss.
And that was way worse than analysts expected.
Considerably worse. It's pretty sobering, isn't it? Seeing that kind of loss from just one asset's price swing.
Really highlights the risk in this strategy. Massive risk.
But it wasn't all bad on the Bitcoin front in Q1. Their holdings were valued around $80,000 per coin then.
Oh, okay.
And despite that big write-down, their Bitcoin yield for the quarter was actually positive 11%.
Oh, interesting. How does that work?
It relates to their operational activities around Bitcoin, potentially lending or other yield-generating strategies. They seem on track for their yearly goal there.
And here's where it gets even wilder. That same quarter, Q1, they did a massive equity offering.
The $21 billion ATM offering, yeah.
And used it to buy another 301,335 Bitcoin.
Which, counterintuitively perhaps, triggered a huge surge in their share price, up 50% in Q1 alone.
So issuing shares to buy more Bitcoin made the existing shares more valuable.
It seems so, tied to the Bitcoin rally and the market rewarding their increased exposure.
And their ambitions aren't stopping there. They've announced this, what is it, the 42-42 plan?
Yep. Aiming to raise another, wait for it, $84 billion.
$84 billion for more Bitcoin.
That's the plan, effectively doubling down again. The scale is just immense. It fundamentally changes their risk profile even further.
Okay, let's zoom out. Trailing 12 months as of end of Q1 25. Revenue, $459 million. EBITDA, negative $36.5 million. So a negative margin over 5%.
Not great.
And EPS for those 12 months, negative $21.81. So yeah, from a traditional standpoint, the core business isn't exactly firing on all cylinders.
But then you look at the stock performance. It's a completely different story.
Totally different. Price as of May 10th, $416.03.
And the gains are impressive. Daily up a bit, weekly up over 5%, monthly up nearly 72%.
And yearly, up over 238%, just crushing the S&P 500.
Market cap hit $105 billion back in early May. It's huge.
And analyst ratings, leaning strong buy, but the price targets are all over the place.
Yeah, that range is incredibly wide. It's like $175 on the low end, $650 on the high end.
Wow.
Just show the uncertainty, right? And the strong conflicting opinions about this whole strategy.
So what's driving these huge stock gains? It's not the software business, clearly.
No, it's overwhelmingly fueled by Bitcoin's rally. Bitcoin was nearing $100,000, remember?
Right.
And Strategy's stock trades at a premium to the actual value of the Bitcoin it holds. Why? Leverage. Investors see it as a leveraged way to bet on Bitcoin.
So the BI business, with its declining revenue, it's barely moving the needle on the stock price.
Minimally, if at all. That's the reality.
We should also mention the leadership changes.
Right.
Michael Saylor, still the founder, executive chairman, the Bitcoin visionary.
Right.
But he stepped down as CEO in August 2022. There was that tax fraud settlement thing.
And Fong Libo took over as president and CEO then. He's the one navigating this unique situation day to day.
Must be quite the job, managing a software company that's also a massive crypto holder.
You think? I mean, what were those internal discussions like leading up to that first Bitcoin buy? Fascinating.
Operationally, they've got about 5,530 employees. Still a sizable software company workforce.
But as we touched on, their market position in BI is slipping. That market share dip.
Yeah. And then there are the risks, the obvious risks.
Bitcoin price volatility, number one. Regulatory uncertainty, number two. Huge unknowns there.
And potentially a strain on cash flow. From those dividends on the preferred stock they issued.
That's a definite possibility. They raised $563.4 million that way in Feb 2025. Those dividends are perpetual. They have to be paid.
Regardless of profit.
Exactly. If cash flow tightens, maybe from a Bitcoin downturn or slowing software sales, that could become a real burden.
Okay, so despite all this Bitcoin focus, they are still innovating on the software side.
Oh, yeah, definitely. They haven't just abandoned the BI platform.
In 2024, 2025, they've rolled out some interesting new features. Big focus on AI and scalability.
Like Strategy 1 Auto 2.0.
Exactly. Upgraded AI agents, faster insights, supposed to handle unstructured data better now, too.
They integrated GPT-4, right? That's a step up. Big step up from GPT 3.54. They're claiming double the platform speed, natural language summaries, customizable auto answers, better data prep,
The goal being?
boost productivity, streamline analysis,
Mm.
embed analytics right into tools people already use like Excel, Tableau, Power BI, make it seamless.
And what about strategy mosaic? That sounds new.
It is. The idea is universal business semantics and governance, like a common language layer across AI, productivity tools, analytics.
Okay.
There's a big focus at their Strategy World 2025 event, meant to improve integration with third-party tools like Google Sheets, broaden this appeal maybe.
And they've made mobile and security tweaks too.
Yep. Upgraded Firebase for Android push notifications, added Othul for Snowflake, better data source management for Palantir Foundry, standard improvements.
But you mentioned mobile challenges earlier.
Yeah, they've acknowledged ongoing issues, especially with Android deployment in places like India, that impacts user experience.
And they're still working on intelligent cubes and the web interface.
Continuous refinement there, faster querying with the cubes, better dashboard interaction on the web.
But that can drive up hardware costs, right?
It can, yeah. Faster usually means more resources needed underneath, so potentially higher costs.
So how's the reception been to these new software features? Strategy 1, Auto 2.0, Mosaic.
Seems like there's definite interest, especially around making analytics easier, more accessible, and integrating with other platforms.
That was the vibe at Strategy World 2025.
Yeah, lots of customer stories, expert talks on using it for things like supply chain, network performance, showing practical applications.
But they still face those hurdles.
Familiar ones, yeah.
Yeah.
High licensing costs are still a thing. The need for pretty robust infrastructure.
The mobile performance issues, especially Android.
Right. And just the intense competition.
Oh.
Cheaper, maybe more tightly integrated solutions like Power BI are tough competitors. Still big obstacles for them.
And user feedback on the new stuff, mixed bag.
Somewhat. People praise the scalability. The visualizations are often liked. But recurring themes are integration problems with mobile. In a sense, it's still got a steep learning curve if you're not super technical.
Okay. Which brings us back to the critical analysis, the big picture.
And it seems pretty undeniable, doesn't it? Their stock performance is just overwhelmingly tied to that leveraged Bitcoin bet.
Not the BI software fundamentals.
No. As you said, BI revenue has been declining for a decade. Critics call it a linear decline. These new AI features show promise, sure, but
they're up against tough, maybe cheaper competition, and mobile issues don't help.
Exactly. And the financial risks tied to the Bitcoin strategy are just massive.
That $84 billion capital raise plan is ambitious, to put it mildly.
Combined with Bitcoin's volatility, it's a very high-stakes game.
Does the BI business generate enough cash?
Well, it seems to generate enough to cover their bond interest payments, which is significant.
Okay.
But those perpetual dividends on the preferred stock, that's the potential long-term strain, especially if Bitcoin tanks for a while.
And market sentiment reflects all this.
Yeah.
Polarization.
Completely. You look online, platforms like X, it's night and day. Bulls who think Sailor's a genius, bears who think it's reckless. Very divided.
So wrapping this up for you, the listener, strategy is just a fascinating, really unique case study.
You've got this long-standing BI company
Decades old.
that's now completely intertwined with the fate of Bitcoin because of its treasury strategy.
And while they are still innovating in BI, new AI features, better integration,
Good stuff, potentially.
the financial impact of that site is just overshadowed right now by Bitcoin's price swings.
Completely.
Ultimately, it's high risk, high reward on a truly grand scale.
The leverage to Bitcoin fueled incredible stock gains, no doubt.
But it leaves them incredibly vulnerable if crypto markets turn south.
Which leads us to that final provocative thought for you to chew on.
Yeah.
Given strategy situation, this unprecedented move,
Yeah.
what does it really mean for a public company to tie its future so tightly to a volatile asset like Bitcoin?
What are the wider implications for corporate treasuries, for how investors assess risk?
It's a really unique, evolving situation. Definitely one to keep watching.
Absolutely. If you want to dig deeper yourself, check out Strategy's investor relations page. That's www.strategy.com.
Or look into the presentations and talks from their Strategy World 2025 event. Lots of detail there.